Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The short term for gold and silver look extremely bearish, but the medium to long term look extremely bullish. This article is talking about how gold is sleeping at the $1,700 level, but not for too long. If you are patient enough to wait out these markets, you will get rewarded. Your patience will pay off. But if you sell yourself short, then that's exactly what you're going to do. You will sell yourself short. You do not want to panic sell. You do not want to fall into the traps. You don't want to let your emotions take over and sell short. Right now, gold and silver are sitting on the lower side, but that doesn't mean they always will, especially in the 3 to 5 year range. It's looking extremely bullish. This article is going to be talking about why some of the trends we see in the market, some of the patterns, and explain why gold and silver seem to be on the upside in the next coming years. So, every price correction in the gold market since August 2018 has been a buying opportunity, which is definitely true. It's just an opportunity to buy for cheaper. It's like a discount. It's like getting your gold and silver on sale. The bull market in gold began back in the early 2000s and reached an all-time peak in 2011 at $1,920 per ounce. Meanwhile, gold in almost all other currency terms has rallied to new record highs over the past months. The last shoe to drop was the Swiss franc, which fell to a new low against the yellow metal in April. The dollar stands as the only leading currency that has yet to experience a new low against gold, but we may not have to wait all that long for that event. Bull and bear markets rarely move in straight lines. When it comes to gold in US dollar terms, the bull roared from the turn of the century through 2011. Gold consolidated above the $10,000 or the $1,040 level from 2011 through June 2019, when the next leg to the upside got underway. Last week, the price of the precious metal corrected below the $1,700 per ounce level, which is likely another in a long series of buying opportunities. So when these dips happen, when these sell-offs happen, when these corrections happen, it doesn't mean the price is crashing. It just means it's an opportunity to buy for cheaper. I believe that gold is heading above the $2,000 per ounce level, and that $3,000 or higher is not out of the question. On price dips, I favor using two leveraged products and a very neutral short-term picture in the yellow metal. In mid-March, during the height of risk-off conditions in markets all across all asset classes, the price of the nearby June gold futures contract on COMEX fell to a low of $1,453 per ounce. The price then proceeded to rally to a new high of $1,788 over the next month. The midpoint of the move from the low to the high stands at $1,620. Gold is not corrected to that level in aftermath of the mid-April peak. However, the price has settled into a trading range around the $1,700 level. So Treasury borrows $3 trillion for now, maybe even seeing more. At the beginning of last week, U.S. Treasury told markets that it's borrowing a record $3 trillion to fund stimulus programs. The previous record came into 2008 when the Treasury borrowed $530 billion from July through September during the global financial crisis, which led to $50 silver and that $1,970 gold range. The current requirements, at over 5 times more than 2008, reflect a far more severe threat to the economy in 2020. As of last week, over 33 million Americans had applied for the first-time unemployment benefits since March, a record level. Many parts of the U.S. and global economies remain in self-induced comas. The Fed, the U.S. government, and other central banks and leaders around the globe are pumping record levels of liquidity into financial systems to stabilize markets and provide assistance to companies and individuals. The price tag will be enormous once scientists find an answer to the global pandemic. The long-term trend is bullish. Compare 2008 to 2020. The stimulus was bullish for gold markets in aftermath of the 2008 financial crisis. Gold is likely to have an even more expensive impact on the yellow metal in 2020 and beyond. The quarterly chart shows gold traded at a low of $681 in 2008 during the height of the financial crisis. Gold then moved over 2.2 times higher to $1,920 in 2011. The policies of the central banks and governments created the environment that took the price of the yellow metal to an all-time peak in US dollar terms. In 2008, the total number of open and long short positions on the COMEX gold futures market fell from a record high of 542,000 contracts in late 2007 to a low below 307,000 contracts in 2008. a decline of over 43%. Over the past months, the open interest fell from just under 800,000 contracts to around 490,000 contracts, or just under 40%. If the mid-March low in gold futures at $1,450 equates to 2008 low, gold follows a similar path. The price of gold could be way over $3,000 per ounce in the coming months and years. A far higher level of stimulus in 2020 compared to a dozen years ago could mean that even higher price levels are in the cards of the yellow metal. So that's definitely true, right? I mean, if the 2008 financial crisis is any type of indicator what's going to repeat itself, then yes, it's going to be extremely bullish for gold and silver. There are no precedents for the self-induced coma in the U.S. and global economies. The loss of jobs, contraction in the worldwide economy, and price tag for the global pandemic guarantees that data over the coming months and years will reflect the most challenging period since the Great Depression of the 1930s. J.P. Morgan analysts recently projected that the U.S. GDP could decline by 40% and unemployment reaching 20%. Analysts will focus on losses rather than earnings per share over the coming quarters. Even though sectors of the economy will begin reopening, many companies will not rehire all of the laid off and furloughed employees. Many job losses will turn from temporary to permanent. The economy will require government stimulus programs and record low interest rates for the foreseeable future. Stimulus increases the money supply, which weighs on the value of fiat currencies that derive value from the full faith in the credit countries that issue legal tender. Gold's history as a commodity and a currency should make its value climb, as governments and monetary authorities cannot increase the supply of gold without extracting more from the crust of the earth, which explains why precious metals or value cannot be created nor destroyed, only dug up out of the ground. And if that's any indicator on where prices are headed, I don't know what else is. I mean, this is a prime example. Stimulus packages, people are unemployed, not temporarily, but permanently, and they have to put together these stimulus packages, pumping more money into these societies to put a cushion under people's feet. And what this is going to do is push gold and silver higher. It always does. As inflation rises, gold prices rise as well. So buying on price weakness in gold with two leveraged products. Price corrections in the gold market have been buying opportunities since August 2018, when the price traded to a low of $1,161 per ounce. I continue favoring purchasing gold bars and coins as they are assets that most closely reflect the price of the yellow metal. Since COMEX gold futures have a delivery mechanism for 100-ounce bars, they represent physical bullion, futures, and physical prices coverage during the delivery period of each contract. So, if you do want to invest into the physical precious metal, I definitely recommend buying from places like APMEX, JM Bullion, Provident Metals, Modern Coin Mart, SD Bullion, places like that. I don't recommend the ETFs. It stands for Exchange Traded Funds, or the ETPs, or any of that stuff. It's much more risky, and there's just more risk involved, and if you can't hold it, you don't own it. That's the saying of the stackers, and that's definitely true, right? The whole point to invest in the precious metals is because the physical benefits that come with the precious metals, that you can hold it, that there's no middleman, that you're in complete control of your wealth, of your money. So over the same period, the UGLD appreciated from $115 to $210 per share, or 82.7%. The triple leverage product delivered an over 3 times percentage gain compared with gold futures markets. So the choice between UGL and UGLD for those looking to turbocharge results in gold when it comes to buying short-term price corrections and taking profits on rallies comes down to the appetite for risk, which is true. Without risk, there's no reward. The higher the risk, the higher the reward. I have both products and continue to convert trading profits into physical gold purchases from long-term investments. And that's what you could do. You could use the profits from that and invest it and transfer it into physical bullion, like he says. Gold may be sleeping for now, but much higher prices are on the horizon if the price action that followed 2008 is an example. So, definitely bullish. I'm curious how bullish you are. Do you think that gold and silver are going to be breaking past their $50 level, $50 silver and $1,900 gold? I definitely think so. $3,000 gold is definitely on the horizon, and I definitely think that silver could break above $50. A lot higher, actually. We're talking about crazy times, so we should be talking about crazy prices as well. So anyways, I'm going to wrap this video up here. I hope you enjoyed this video. If you did, make sure to smash the like button, especially if you stuck around this long in the video. I definitely appreciate you for supporting the channel, for sticking around and hearing what I had to say. I hope you have a wonderful stacking strategy, have a wonderful Mother's Day. Hopefully you spend it with friends and family, and I hope that your day is going beautifully. Hopefully this video was a little glimpse of hope, insight, knowledge to refresh yourself, and so you can have the most on-point stacking strategy possible. Thanks for tuning in. This was Silver Slayer. The link to this article will be in the description. I'll see you guys soon. Peace.